The world is moving fast and you don't have time to read headlines all day. This is Rushing, simplified news for busy investors. Made by a woman who trades and talks straight to the point. You'll get what's moving markets each day, why it matters, and where money's flowing. Subscribe and get this for free. First headline: US-China trade war reignites. What does it mean? The world's two biggest economies are back in the ring. Washington is tightening export rules and Beijing is threatening counter-tariffs, reigniting fears of a full-scale trade war. Supply chains are once again under stress. Why magnify it? Trade tensions ripple through currencies, inflation, and investor sentiment faster than almost any policy event. The return of tariffs means more uncertainty for earnings and global growth. Possible affected sectors: industrial exporters, commodities, logistics, and emerging market equities. Second headline: markets bet big on Fed rate cuts. What does it mean? Traders are calling the Fed's bluff. Futures now price in a major rate cut before month-end, a sharp shift from the cautious tone just weeks ago. It's the market's way of saying, recession risks are real. Why magnify it? Lower rates can boost risk assets, but they also signal fear about slowing demand. If the Fed caves to pressure, it could trigger a rally in growth and tech, followed by a potential inflation whiplash. Possible affected sectors: tech, housing, utilities, consumer discretionary, and rate-sensitive financials. Third headline: Wall Street banks shock with strong profits. What does it mean? Forget the doom talk. America's biggest banks just crushed expectations. M&A pipelines reopened, credit losses narrowed, and trading desks printed profits. The financial system looks sturdier than the headlines suggest. Why magnify it? When banks deliver, markets breathe easier. Strong earnings imply healthier credit flows and investor confidence, which can extend equity momentum into year-end. Possible affected sectors: major financials, capital markets, fintech, and business services. Fourth headline: artificial intelligence and chips are on fire again. What does it mean? The AI boom refuses to cool off. Semiconductor leaders from Taiwan to Silicon Valley are reporting record orders for high-end processors that power data centers and generative AI systems. Why magnify it? Tech is carrying global equity sentiment on its back. The semiconductor cycle is now the market's oxygen. Every beat in chip demand shifts risk appetite across indexes. Possible affected sectors: semiconductors, cloud infrastructure, AI hardware, and growth tech. Last headline: banking fears spark a volatility spike. What does it mean? Just when traders got comfortable, regional bank worries are back. Rising credit defaults and deposit flight chatter have volatility gauges jumping. Investors are heading for hedges again. Why magnify it? Financial fragility is the market's hidden fault line. One weak link in regional banking can quickly snowball into liquidity fears, especially with rate cuts in play. Possible affected sectors: regional banks, high-yield credit, insurance, and defensive plays like gold and treasuries.